Hello, good morning everyone. How are you feeling today? Welcome to Unacademy, India's largest online learning platform that provides to you a world of courses, resources, content, live and recorded sessions to help you in your preparation for the CA Foundation and intermediate examinations. Also, I would like to welcome you to crack CA exams with us, which is a vertical and channel of Unacademy that caters to the students of CA Foundation and Intermediate in their journey and pursuit of preparation for the CA Foundation and Intermediate examinations by providing top educators, quality content, and overall a great learning experience. So come, let's crack CA exams with Unacademy, India's largest online learning platform. Welcome to my session once again. Before we proceed, a brief introduction about the Educator today. Hello, I'm Prathik Gupta. I am a Bachelor of Commerce from Christ College, Bangalore University. I am an associate member of the Institute of Chartered Accountants of India, an associate member of the Institute of Cost Accountants of India, an associate member of the Institute of Company Secretaries of India, and also a law graduate from Karnataka State Law University. I'm currently a practicing chartered accountant and also a visiting faculty for CA subjects and an educator for CA students, both offline and online. Prior to starting on my own, I worked with SR Bartley Boy and Associates, that is the Indian member firm of Ernst & Young Global in the Audit and Assurance Department. Then I went on to work with Ernst & Young India, EY India, in the Mergers and Acquisitions Department. And then finally, I went on to work with the Manipal Group in Bangalore as the corporate controller of their Indian entity as well as their German subsidiary located in Frankfurt, Germany. It was only after I got back from Frankfurt, Germany that I decided to start something on my own. And that also gave me an opportunity to become an educator, which in turn has given me this opportunity today to be able to take this session for you young, bright and enthusiastic CA aspirants. Thank you so much for giving me this opportunity and I hope you find my session useful. Anytime during the session, in case you have any questions, queries, observations or discussions to be made, please do not hesitate to drop in a line and I will be more than happy to take up the matter for problem solving or for discussion purposes as the case may be. Alright, moving on, like I told you, Unacademy caters to you in your preparation for the CA Foundation and Intermediate examination. It does so through three platforms, that is YouTube, Special and the Plus platform. Now YouTube and Special classes are absolutely free of cost, but they provide to you a tremendous amount of value and resources to help you in your preparation for the CA Foundation and Intermediate examinations. YouTube is what you're watching right now, where you just need to go onto the YouTube channel, type in Prathik Gupta and you'll see my numerous number of hours on the YouTube channel of Unacademy, which will help you in your preparation for the CA Foundation and Intermediate examinations. Coming to the special classes are also absolutely free of cost and they're provided on the Unacademy learning app, more about which I will tell you in the following slides. The special classes too provide to you tremendous amount of value and resources to help you in your preparation for the CA Foundation and Intermediate examinations. Coming to the Plus platform of Unacademy, the Plus platform of Unacademy is the premium platform of Unacademy that caters to the students of CA Foundation and Intermediate in their journey and pursuit. Plus platform of Unacademy is the premium platform of Unacademy that is a payment-based subscription model and which provides various subscription packages for the examinations. More about the packages in the following slide, but in this slide I will tell you quickly why I recommend and encourage you to become part of the Plus platform. The first reason why I recommend and encourage you to become part of the Plus platform of Unacademy is because of the daily live classes it provides, where you get to chat with your educator, engage in discussions, ask your doubts and answer polls, all this while the class is going on. The second reason why I recommend and encourage you to become part of the Plus platform of Unacademy is because of the live tests and quizzes it conducts on a regular and periodic basis to evaluate your preparation and also get a detailed analysis of your performance. The third reason why I recommend and encourage you to become part of the Plus platform of Unacademy is because of the structured courses it provides, where all our courses are structured in line with your exam syllabus to help you best prepare for it. And lastly and most importantly, the reason why I recommend and encourage you to become part of the Plus platform of Unacademy is because of the unlimited access that it provides to you, where the one subscription to the Plus platform of Unacademy gets you access to all our live and recorded courses to watch from the comfort of any of your devices. So keeping all these advantages in mind, among many others, I strongly recommend and encourage you to become part of the Plus platform of Unacademy in order to accelerate and enhance your preparation for the CA Foundation and Intermediate examinations. Moving on. Now in the previous slide you heard me say live and recorded courses. So if you're wondering what those live and recorded courses are, those live and recorded courses are live and recorded plus courses and live and recorded special classes. And if you're wondering where they are available on an app known as the Unacademy Learning app. Okay. They're available on an app known as the Unacademy Learning app. So, for all of you who have downloaded, installed, and registered on the Unacademy Learning app and are using it, I thank you very much, and I request your support in the future as well. For those of you who have not yet downloaded the Unacademy Learning app, I request you to go to the Play Store on your mobile phones, download the Unacademy Learning app, install the Unacademy Learning app on your phones, put in your mobile number where you will get an OTP, and using that OTP, you can register on the Unacademy Learning app. It is as simple as that, with no lengthy or complicated procedures. The next question you might ask me is, okay, you've downloaded, installed, and registered on the Unacademy Learning app, so what's next? So let me tell you that the Unacademy Learning app gives you access to all the live and recorded plus courses that Unacademy has to offer to you to help you in your preparation for the CA Foundation and Intermediate examination. And not only this, it also gives you access to all the live and recorded plus courses that Unacademy has to offer to you in order to accelerate and enhance your preparation for the CA Foundation and Intermediate examinations. So keeping these points in mind, I request you to download, install, and register on the Unacademy Learning app as soon as possible in order to make use of the world of resources that Unacademy has to offer to you to help you in your preparation for the CA Foundation and Intermediate examinations. Moving on, like I told you, the Plus platform of Unacademy is the premium platform of Unacademy, that is a payment-based subscription model and which provides various subscription packages for the various examinations. So accordingly, the CA Foundation and the Intermediate subscription packages provided by the Plus platform of Unacademy are as follows. The packages provided are for 1 month, 3 months, 6 months, 12 months, and 24 months. The 1 month package will cost you rupees 3,500. The 3 months package will cost you rupees 8,750. The 6 months package will cost you rupees 14,000. The 12 months package will cost you rupees 17,500, and the 24 months package will cost you rupees 21,000. Now please remember, all these are the listed price of the packages. So before you make the payment for the package of your choice, please do not forget to use the code Prathik to get an instant discount of 10% on the other listed price. I repeat, please do not forget to use the code Prathik to get an instant discount of 10% on the above listed price. The after discount price of the various packages are as follows. The 1 month package will cost you rupees 3,150. The 3 months package will cost you rupees 7,875. The 6 months package will cost you rupees 12,600. The 12 months package will cost you rupees 15,750, and the 24 months package will cost you rupees 18,900. So you see, immediately you get a savings or discount of 10% when you use my code Pratik. Now there is an important announcement. This 10% discount is being reduced to 5% from 1st of March 2021. I repeat, this discount of 10% is being reduced to 5% from 1st March 2021. So in case you have thought about joining the Plus course or have decided about joining the Plus course of Unacademy but not yet done so, this is the right time for you to do so, because this discount of 10% is applicable only till February 28, 2021, after which it is becoming 5%. So go ahead and make use of it, and while doing so, please do not forget to use the code Pratik to get an instant discount of 10%. Now, I personally recommend you to start off with the 12 months or 24 months packages for 2 reasons. Firstly, it is cost effective. If you compare the 1 month package cost with the per month cost of the 12 months and 24 months packages, you will see that you're getting great cost savings almost immediately. And secondly, and most importantly, since the CA Foundation and Intermediate courses are provided to you in one package, that is the 12 months or 24 months package, a 12 or 24 months package will be highly beneficial to you because it covers the duration of both your courses. That is the CA Foundation and Intermediate, which normally take a minimum of about 6 months for you to prepare, and 12 months for you to prepare and clear. So if you're getting a package that is 12 months or 24 months that covers the duration of both your CA Foundation and the Intermediate at a very cost-effective price, I think that is a very good deal. But having said this, you're free to choose the package of your choice. But before you make the payment, please do not forget to use the code Pratik to get an instant discount of 10%. Again, I repeat, this 10% is being reduced to 5% from 1st of March 2021. So go ahead and make the most of it. You can also make use of the no-cost EMI options available for the 6 months, 12 months, and 24 months packages, just in case you do not wish to make the entire payment at one shot. And the other payment options are internet banking, debit card, and credit card, and also all the coins that you've accumulated by watching the special classes can be redeemed while making the subscription for the Plus program. So keeping all these offers, incentives, and discounts in mind, and these packages in mind, and also the other advantages I told you a couple of slides earlier in mind, I strongly recommend and encourage you to become part of the Plus platform of Unacademy as soon as possible in order to accelerate and enhance your preparation for the CA Foundation and Intermediate examinations. Alright, now Just give me a second. Okay, now like I told you, the Unacademy Learning app gives you access to all the live and recorded special classes. Here are the snapshots of few of the many special classes that I have conducted on the Unacademy Learning app that you can make use of in your preparation for the CA Foundation and intermediate examinations. There are special classes on revision test paper, Sale of Goods Act, Indian Contracts Act, the Companies Act, Fundamentals of Accounting, revision on partnership accounts, revision on partnership accounts, death, retirement, admission, valuation of inventories, revision on final accounts of entities, revision on sale of goods or accrual basis, and many more. So all you need to do is log into the Unacademy Learning app, go to my profile Prathik Gupta, so that you can make use of the over 100 hours, over hundreds of hours of special classes that I've taken exclusively for the benefit of CA Foundation and intermediate students. Also, here are the links to few of the many special classes that I have conducted on the Unacademy Learning app, which you can make use of. You can either click on these links or copy and paste these links on your browser to take you directly to the special class on the Unacademy Learning app. There are special classes on the Indian Contracts Act, the Sale of Goods Act, the Indian Partnership Act, the Limited Liability Partnership Act, the Companies Act, Basics of Communication, accounting concepts, revision test papers, and many more. So like I told you earlier, please log into the Unacademy Learning app, go to my profile Prathik Gupta, and start making use of the hundreds of hours of special classes that I've taken exclusively for the benefit of CA Foundation and intermediate students. Alright, so let's continue with the session today, where we are going to talk about the Negotiable Instruments Act 1881 Part 2. Part 1 was done yesterday in detail. So in case you have missed it, I request you to go to my session yesterday and go through that in detail. Okay? But just for the benefit of the people who have missed it yesterday, we will do a quick recap, and I will give you about 10 or 20 seconds on each slide, and then you can go through this. So this was the introduction on the Negotiable Instruments Act. Again, please go through this, take about 10 or 20 seconds, go through this, and then we proceed. Any questions, please ask. I'm not explaining this because we've done it yesterday, but I'm doing it only for your recap. Okay, so you know from where so you can catch up from where we stopped. Come on, quickly read it, and then we proceed. Come on. Okay, recent developments. So the latest that the Negotiable Instruments Act has been amended is in 2018. Please remember it's from 1881, so it's quite an old act. And the most recent amendment came in 2018. Okay, please take about 30 seconds, go through this. Then we proceed. Any questions, please ask me. We are just recapping what we've done already. Come on, are we done? Okay, now meaning of negotiable instruments and what are the kind of negotiable instruments we're talking about in this session. We will be talking about promissory notes, bill of exchange, and checks. Okay, please take about 30 seconds, go through this. I'm not explaining this because we've done it already. I'm just trying to recap it for you. Okay, we will continue from where we stopped yesterday. Come on, go through this. Come on. Okay, then the essential characteristics of negotiable instruments. It should necessarily be in writing, it should be signed, it is freely transferable, holder's title is free from defects, it can be transferred any number of times till its satisfaction. Every negotiable instrument must contain either a promise or order to pay money. Also, the promise or order must be unconditional, and the promise or order to pay must consist of money only. Nothing should be payable whether in addition or in substitution of money. Also, the sum payable must be certain. Quickly go through this. This is an important slide. All negotiable instruments need to have this characteristics in addition to others which we will discuss specifically when we go ahead. Go through this. We discussed this in detail yesterday. Come on. Okay, are we done? Carefully go through this, please. Okay, then this was an important one, presumptions as to negotiable instruments. We discussed this yesterday as well. Okay, please take a minute, go through this carefully. Any questions you may have, please ask me. I'm not explaining this because we've done it yesterday, but I'm just trying to recap it for your benefit. Come on, are we done? Okay, let's move on. Now let's start off with the first one, the promissory note. Like I said, we will be discussing three kinds of negotiable instruments. That is a promissory note, a bill of exchange, as well as a check. Okay. So then we discuss in detail what a promissory note is. So please take a minute. Please take about 30 seconds. Go through this. Any questions? Please ask me. We have discussed this in detail yesterday. Come on. Okay, are we done? Okay, the essential characteristics of a promissory note. See, it's done already yesterday. Go through this again. Recap quickly. Come on. Let me know once you're done. Any questions, please ask. This is a recap of what we've done yesterday. Continuing with some examples and the characteristics of promissory notes. Please take about 10-20 seconds. Go through this as well. Are we done? Okay, moving on. Again, some examples and some characteristics of promissory notes. Quickly go through this. on. Any questions, please ask. Okay, then the next the next negotiable instrument that we're going to discuss about is a bill of exchange. We finished about promissory note. Now this is bill of exchange. Take about 10-20 seconds. Go through this. We have done this yesterday. That's why I'm not repeating it. We will continue from where we stopped yesterday, but this is a quick recap for those who missed the session yesterday. All right. Okay, take about 10 more seconds. All right, then move on to the essential characteristics of bill of exchange. This is an important one. We did discuss this in detail yesterday. Please take about 10-20 seconds. Go through this. Come on. Okay, then the difference between a promissory note and bill of exchange. This is an important slide, an important question from your exam point of view as well. Please take a minute, go through this. We did discuss this in detail yesterday. Come on. Okay, it's an important slide. Go through this. Take another 30 seconds. Okay, then we go on to discuss what is a check, the last of the bill of exchange. This is the one which we can relate to mostly, right? Because all of us know what is a check. We may not have encountered a promissory note or a bill of exchange, but definitely we have encountered a check sooner or later. Okay, please take about 10-20 seconds, go through this. This was done yesterday, so it's a quick recap. So I'm giving you about 20 seconds to go through this, and then we will continue from where we stopped yesterday. Come on. Any questions you may have, please ask me. Are we done? Okay, then take about next one, the explanations for this purpose. Take about 20 seconds, go through this. This was also done yesterday. So go through this yesterday. It's a recap of what we have done yesterday. Go through this quickly, take about 10 or 20 seconds. Then we will continue from where we stopped yesterday. Hmm. Okay, then we have another couple of explanations for the purpose of check. Take about 10-20 seconds, go through this. We did discuss in detail about it in the last session, so I'm not repeating it now again. Okay, but I'm giving you some time to recap it, read it, and then we will proceed. Any questions you have on this, please ask me. This is for the benefit of the people who missed the Negotiable Instruments Act 1881 Part 1, which was done yesterday. Today we are doing Part 2. Okay, any questions, please ask me. Come on. Okay, then the parties to a check. You have three parties, that is a drawer, drawee, and a payee. In case of a check, the drawee is always a bank. Okay, whereas in a bill of exchange, the drawee can be someone else. Alright, that's the difference, major difference between a check and a bill of exchange. Please take about 10-20 seconds, go through this. Any questions, please ask me. We have done this yesterday. That's the reason why I'm giving you 10-20 seconds to recap, and then we continue. Are we done? Any questions, please ask. Okay, then the essential characteristics of a check, important. Okay, we did discuss this yesterday. Take about 10-20 seconds, go through this, then we proceed. Any questions, please ask me. Are we done? We did go through this yesterday. Okay, then again, we have seen what is an acceptor for honor, and how acceptance for honor must be made. Take about 10-20 seconds, go through this, then we proceed. This was all done yesterday. Okay, that's the reason why I'm moving on it quickly and giving you time to recap. Okay, essentials of a valid acceptance for honor. Take about 10-20 seconds, go through this. Recap. Come on. Yes, go through this as well. Okay, the holder and holder in due course, we discussed this as well. Please take about 10-20 seconds, go through this. Come on. Are we done? Okay, continue reading this please. Just another one or two slides, then the recap for yesterday is done. Then we will continue. Okay, yes, take about 10-20 seconds more. Okay, go through this. Now, this is an important concept which we discussed yesterday, a holder in due course. Take about 10-20 seconds, please. Go through this carefully. Then we proceed. Come on. Okay, come on. Take another 10-20 seconds. Go through this. Come on, go through this. Okay, we're done with this. Essentials of becoming a holder in due course. Please go through this. Now the privileges of being a holder in due course. Take about 20 seconds, go through this. Come on, go through this again. Take about 10 more seconds. Let me know once you're done. Okay, this is the last slide, what we did yesterday. Come on, quickly go through this, 10-20 seconds, and we proceed. Come on. Come on. Take about a minute more, go through this. Come on. Okay, so let's start off. Now, classification of negotiable instruments. So, what are the various categories that the negotiable instruments can be classified into? They can be classified into bearer instrument or order instrument. Now, bearer instrument simply means whoever is holding the instrument, that person needs to be paid, and an order instrument means on the order of the person who is named on that instrument. A bearer instrument, it is an instrument where the name of the payee is blank or where the name of the payee is specified with the words or bearer, or where the last endorsement is blank. Such instrument can be negotiated by mere delivery. So that means an instrument on which either the name of the payee is blank or it is name of the payee is written with or bearer. That means whoever is bearing that instrument can be paid. Such an instrument is easily negotiable by mere delivery from one person to another. Order instrument. An order instrument, it is an instrument which is payable to a person or payable to a person or his order, or payable to order of a person, or where the last endorsement is filled. Such instrument can be negotiated by endorsement and delivery. So normally what will happen is, in case if it's an order instrument, then it has to be paid to a particular person or to the order of that particular person. By mere delivery, you cannot negotiate the negotiable instrument. Okay. So there it has to be by endorsement and delivery, whereas in a bearer instrument it has to be by mere delivery. Please take a minute, go through this. Any questions, please ask me. Okay, now an inland instrument and a foreign instrument. A promissory note, bill of exchange drawn or made in India and made payable in or drawn upon any person resident in India shall be meant to be an inland instrument. So the next classification of negotiable instrument is inland instrument and foreign instrument. So any promissory note, bill of exchange or check which is drawn or made in India and it is also payable to a person in India shall deem to be an inland instrument. Example, a promissory note made in Kolkata and payable in Mumbai. Bill drawn in Varanasi on a person resident in Jodhpur, although it is stated as payable in Singapore. Okay, foreign instrument, any such instrument not so drawn, made or payable shall be deemed to be a foreign instrument. In other words, okay, one second. Okay, shall deem to be a foreign instrument. In other words, a bill drawn outside India and made payable or drawn upon any person resident in a country outside India. A bill drawn outside India and made payable in India or drawn upon any person resident in India. Bills drawn in India, made payable outside India or drawn upon any resident outside India but not made payable in India. So in these situations, the bill of exchange, the promissory note or a check will be known as a foreign instrument. Okay, please take 2 minutes, go through this. Any questions, please ask me. Come on. Please take a couple of minutes. Any questions, please ask me. Are we done? Okay, negotiation or transfer of negotiable instruments. Now we are going to see how can a negotiable instrument be negotiated or transferred from one person to another. One of the essential characteristics of a negotiable instrument that it is freely transferable from one person to another. The rights in a negotiable instrument can be transferred from one person to another by negotiation under the Negotiable Instruments Act or assignment under the Transfer of Property Act. Please remember, a negotiable instrument is considered as a movable property. Okay, so it can be assigned under the Transfer of Property Act by one person to another, or it can be negotiated or transferred from one person to another under the provisions of the Negotiable Instruments Act. According to Section 14 of the Negotiable Instruments Act, when negotiable instrument is transferred to any person with a view to constitute the person the holder thereof, the instrument is deemed to have been negotiated. Thus, there is a transfer of ownership of the instrument. Negotiable instruments may be negotiated either by delivery or when these are payable to the bearer, or by endorsement and delivery when they are payable to the order. So, a few minutes back we saw the slide, right? What the kinds of negotiable instruments. There is a bearer negotiable instrument and a order negotiable instrument. So if it is a bearer negotiable instrument, it can be just transferred or negotiated mere by delivery from one person to another. But if it is a transfer, if it is an order instrument, then it has to be negotiated by endorsement and delivery. Endorsement means behind the negotiable instrument, you will actually have to write the name of the person you're endorsing it. Then the endorser has to sign it, and then only it can be negotiated or transferred to another person. Okay. So the negotiation or transfer of negotiable instruments can be happen as per the negotiation under the Negotiable Instruments Act, or according to the assignment under the Transfer of Property Act. So we just discussed how a negotiable instrument can be transferred under the Negotiable Instruments Act. Please take 10 seconds or maybe 20 seconds, go through this. Any questions? Please ask me. Come on. Please take a couple of minutes, go through this, and then we proceed. Any questions? Please ask me. Come on, let me know once you're done, please. Are we done? Okay. Next, now the modes of negotiation of instrument. A promissory note, bill of exchange, or check is payable to bearer is negotiated by the delivery thereof. A promissory note, bill of exchange, or check payable to order is negotiated by the holder by endorsement and delivery thereof. So we did discuss this, right? So if it's just a promissory note, bill of exchange, or check payable to the bearer, that can be easily transferred or negotiated by delivery thereof. But if it is a promissory note, bill of exchange, or check payable to the order of a person, then that promissory note, bill of exchange, or check is negotiated by the holder by endorsement and delivery thereof. Okay, so what do you mean by negotiation by delivery? Subject to the provisions of section 58, a promissory note, bill of exchange, or check is payable to bearer is negotiated by delivery thereof. Delivery means just passing on the possession of that negotiable instrument from one person to another. Okay. Then exception. A promissory note, bill of exchange delivered on condition that it is not to take effect except in certain event is not negotiable, except in the hands of the holder of a value without notice of the condition, unless such event happens. Okay, so now we understood what do you mean by negotiation by delivery. Please take 2 minutes, go through this. Any questions? Please ask me. Come on, any questions? Please ask. Any questions? Please ask me. Come on. Let me know once we're done, please. Okay, then examples. Now, A, the holder of a negotiable instrument payable to bearer delivers it to B's agent to keep it for B. The instrument is said to be negotiated. Like I told you, if there's any bill of exchange or a negotiable instrument that is payable to the bearer, it can simply be transferred or negotiated by mere delivery. Let's take a second example. A, holder of a negotiable instrument payable to bearer, which is in the hands of A's banker, who is at the time the banker of B, directs the banker to transfer the instrument to B's credit in the banker's account with B. The banker does so and accordingly now possesses the instrument as B's agent. The instrument has been negotiated and B has become the holder of it. Okay, so there you see another example where a negotiable instrument which is payable to bearer has been endorsed. Then what do you mean by negotiation by endorsement? Subject to the provisions of section 58, a promissory note, bill of exchange or check which is payable to order. The first one was payable to bearer, but if it is payable to order, is negotiated by the holder by endorsement and delivery thereof. Now, what is the importance of delivery in negotiation? Delivery of an instrument is essential, whether the instrument is payable to the bearer or order for effecting the negotiation. The delivery must be voluntary and the object of delivery should pass the property of the instrument to the person to whom it is delivered. The delivery can be actual or constructive. Actual delivery takes place when the instrument changes hand physically. Constructive delivery takes place when the instrument is delivered to the agent, clerk or servant of the endorsee on his behalf, or when the endorser, after endorsement, holds the instrument as an agent of the endorsee. So please remember, for any negotiation to happen, whether it is endorsement and delivery, or it is whether it's a negotiable instrument payable to bearer or a negotiable instrument payable to the order, the delivery is very important. Delivery means the negotiable instrument shall pass hands from the one person to another. Without that, there can be no endorsement or no negotiation would have been said to be done. Okay, please take 2 minutes, go through this. Any questions, please ask me. Any questions, please ask. Come on. Any questions, please ask me. Let me know once you're done. Any questions, please ask me. Come on, let me know once you're done. Please take another minute, carefully go through this. It's an important point. Come on, take another minute please, go through this carefully. Okay, then difference when effective between the parties, delivery when effective between the parties, the negotiation of instruments between the parties, as between the parties standing in immediate relation, and as between such parties and any other holder of the instrument other than a holder in due course. So how delivery is actually said to be made? You might have a question in your mind that how is the delivery actually said to be made? Delivery to be effected must be made by the party making, accepting or endorsing the instrument, or by a person authorized by him. So whoever is the party making, accepting or endorsing the instrument can make a delivery of the instrument, or any other authorized person by him on his behalf. It may be shown that the instrument was delivered conditionally or for special purpose only, and not for the purpose of transferring absolutely the property therein. Okay, so please remember, for any negotiation to happen, there should be delivery. We saw that a couple of slides earlier, right? So a negotiable instrument has to be delivered to the person in order to transfer it to him or negotiate with him. So how delivery is made? The delivery can, like we discussed earlier, the delivery can be actual or constructive. Actual delivery means when it changes hands from one person to another. Constructive means when one person holds it on behalf of the other person, then they're said to be a constructive delivery. So for any delivery, there is supposed to be an actual or constructive delivery. Alright, and it may also be shown that the instrument was delivered conditionally or for a purpose, special purpose only, and not for the purpose of transferring absolutely the property therein. Okay, so this is about when is delivery effective. Please take a minute, go through this. Any question, please ask me. Come on, please take a minute, go through this. Let me know once you're done. Come on. Any questions, please ask me. Any of you, any questions? Let me know once you're done, please, all of you. Okay, now, what do you mean by endorsement of an instrument? Okay, this is an important concept you need to know. Now, so far we discussed what do you mean by delivery of an instrument. Now, let's talk about what do you mean by endorsement of an instrument. Meaning, when the maker or holder of a negotiable instrument signs the same, otherwise than as such maker for the purpose of negotiation, which means whenever the maker or holder of an instrument signs his name on the instrument, other than as such as the maker of the instrument, for the purpose of transferring it to someone else. Okay, negotiation means transferring it on the back or the face thereof, or on a slip of paper annexed thereto, to be known as allonge, a French word meaning a slip of paper attached to the end of a bill of exchange to give room for further endorsements. Further endorsement simply means further transfers or further negotiations. So if a person who is the maker or the holder of an instrument signs his name, not as a maker but as an endorser, in order to transfer that negotiable instrument further, then it could be either behind the check or on the face of the check if there's place there, or a slip attached to the check. The person to whom the instrument is endorsed is called the endorsee. The endorsement therefore means signatures of the person which are generally made at the back of the instrument for the purpose of negotiation, that is transfer of rights to another person. The signature may also be made on the face of the instrument. No particular form of words is necessary for an endorsement. Okay, so while a person is transferring or endorsing a particular check to someone else, he could either sign at the back of the check or he could sign on the face of the check, wherever there is place, and then he might endorse it further. Endorsement: when the maker or holder of a negotiable instrument signs the same otherwise than as such maker for the purpose of negotiation. Negotiation means transfer. On the back or on the face of it, or a slip of paper annexed thereto, or so signs for the same purpose, a stamped paper intended to be completed as a negotiable instrument. Okay, he, the maker or holder of the instrument, is said to endorse the same and is known as endorser. Now, see, endorsement is a simple concept. Now, you received a check from someone. Okay, now let's say a person owed you 10,000 rupees and you owed another person 10,000 rupees. So when you receive the 10,000 from that person, it is possible for you to endorse or transfer that same check to the person you owe 10,000 to. Now how do you do that? Firstly, the instrument should be payable to bearer or to payable to the order, and behind that check you can say endorsed to C and put your signature and give the check to C, who you owe 10,000 rupees. So once that is done, C can go and deposit the check, and directly from whoever you were supposed to get the money, his bank will be debited and C will be credited. Okay, so that is what you mean by endorsement. Are you clear? Please take a couple of minutes, go through this. Any questions, please ask me. Any questions, please ask. Come on, please take another minute. Go through this carefully. Any questions you may have, please ask me. Come on. Any questions, please ask me. Carefully go through this. It's an important concept and you should know about this. Let me know once you're done, please. Are we done? Please take another minute. Let me know once you're done. Carefully go through this. Come on, let me know once we're done, please. Are we done? Come on, let me know once you're done, please. Okay, now let's look at a couple of examples. Example X, who is the holder of a negotiable instrument's rights on the back thereof, pay to Y or order and signs the instrument. In such a case, X is deemed to have endorsed the instrument to Y. If X delivers the instrument to Y, X ceases to be the holder and Y becomes the holder. So we did see, right, that delivery is an important part of negotiation. So endorsement in blank and endorsement and in full endorsing. If the endorser signs his name only, the endorsement is said to be in blank. And if he adds direction to pay the amount mentioned in the instrument to or to the order of a person specified, the endorsement is said to be in full, and the person to be so specified is known as endorsee of the instrument. So even here, please note there are two types of endorsement: endorsement in full and endorsement in blank. If the person endorsing the instrument just signs at the back and gives it to another person, that means it's said to be an endorsement in blank, because then the other person to whom it is handed over has an option to endorse it further. Okay, but if the person endorsing it signs and he writes the name that pay to the order of so and so person, then it is said to be an endorsement in full and it has been endorsed to a specific person. Okay, the provisions of this act relating to a payee shall apply with all necessary modifications to an endorsee. Example, blank or general. No endorsee is specified in the endorsement in blank. It contains only a bare signature of the endorser. A bill so endorsed becomes a payable to the bearer. Okay, specimen, Motilal Podar just signs it. He does not mention to whom he is endorsing it, so that becomes an endorsement in blank. But if he mentions the name of the person to whom it is being endorsed, then it becomes an endorsement in full. Alright, please take 2 minutes, go through this. Any question, please ask me. Any questions, please ask. Come on. Any questions, please ask me. Come on, take a couple of minutes. Any questions, please ask. Any questions, please ask me. Take another minute. Carefully go through this. Come on, come on, come on, come on. Okay, are we done? Please take about 30 seconds more, go through this. Any questions, please ask me. Are we done? Okay. Let's take a second example. This is a full endorsement. In such an endorsement, in addition to the signature of the endorser, the person to whom or whose order the instrument is payable is specified a specimen paid to B, Batliwala or order, S. Shroff. Okay, so that means this has to be paid to B, Batliwala or order. So the various kinds of endorsement. So we've already seen endorsement in blank and endorsement in full. Endorsement in blank, when the endorser just puts his signature without specifying the name of the endorsee, the endorsement is said to be in blank. That is section 16. The effect of such an endorsement is to render the instrument payable to bearer even though originally payable to the order. Then we have endorsement in full, where a name and signature, where along with the endorser's signature, the name of the endorsee is specified. The endorsement is said to be endorsement in full. Thus, where the instrument says pay X or order and is signed by A, it constitutes an endorsement in full. Okay, please take 2 minutes, go through this. We have discussed this already, but just go through this. Any questions you may have, please ask me. Come on. Any questions, please ask. Come on. Come on. Please take another minute. Come on, any questions, please ask me. Come on. Okay, I think if there's no questions, as we've taken about 75 minutes of continuous classes, let's take a break for about 5 to 8 minutes. So let's go, so all of you can just go and freshen up, stretch a little, grab something to eat, and come back in about 8 minutes. So we will resume the session at about 12:24. Okay, let's take a break for about 5 to 8 minutes and then we'll come back. Okay. Come on, I'm back. But yeah, you can just come back, join me in another 3 to 4 minutes. Come on. Come on. You have another 3 4 minutes. Come back from your break. Come on. I'm here already. Three more minutes. Come back. Come back from your break, everyone. Hmm. Come on, 2 more minutes. Come back. Hmm. Come on, just another minute and then we'll resume the session. Come on. Okay, are we done? All right, let's resume. All right, so we are looking at the various kinds of endorsement. Then the third one is partial endorsement. An endorsement which purposes to transfer only a part of the amount of the instrument is known as partial endorsement. As per section 56, such an endorsement is invalid under law. So if you have a negotiable, let's say you have a check for 10,000, but you're planning to transfer only 5,000 to someone, that is invalid as per law. Example, A is the holder of a bill for 10,000. A endorses it, thus pay B or order rupees 5,000. This is partial endorsement and invalid for the purpose of negotiation. But there is an exception to this. Second part of section 56 states that if a bill has been paid in part, the fact of the part payment may be endorsed on the instrument and it may then be negotiated for the residue. Example, a bill may be endorsed, pay A or order 5,000 for the unpaid residue of the bill. It is a valid endorsement. So at times, even the remaining amount can be done. Alright. Then you have a restrictive endorsement. What is a restrictive endorsement? An endorsement is restrictive when the endorser, while making endorsement, restricts or excludes the right of the endorsee to further transfer the. So basically, whoever is making the instrument or endorsing the instrument, if he doesn't want that instrument to be further endorsed to anyone, that is known as a restrictive endorsement. To further transfer the instrument or constitutes the endorsee as to an endorse the instrument or to receive its content for the endorser or for some other specified person. An endorsement is restrictive when it prohibits or restricts the further negotiability of the instrument. It merely entitles the holder of the instrument to receive the amount of the instrument for specific purpose and does not entitle him to negotiate it or transfer it further. So that is known as a restrictive endorsement. Please take a couple of minutes, go through this. Any questions? Please ask me. Come on, take a couple of minutes, go through this, please. Come on, let me know if you have any questions. Come on, any questions? Please ask me. Please take another minute. Let me know once you're done, please. Any questions? Come on. Okay, now let's take an example. D signs the following endorsements on different negotiable instruments payable to the bearer. Pay the contents to G only. Pay G for my use. C. Pay G or order for the account of H. These endorsements exclude the right of further negotiation by G. That means these are all restrictive endorsements. Now, in the first one, he said pay the contents to G only. Pay G for my use and pay G or order for the account of H. Okay, so that means these cannot be further endorsed. The fifth one is conditional endorsement. Section 52 gives the power to an endorser to insert in an endorsement by express words a stipulation negating or limiting his own liability to the words holder by making such liability or the right of the endorsee to receive the amount due thereon upon the happening of a specified event, although such event may never happen. Okay, conditional endorsement can be achieved by an endorser in any of the following ways. So there are also ways in which an endorsement may contain a condition. So let's have a look at when can a conditional endorsement be made. A. Sans recourse endorsement. By excluding his liability, that is the holder of a bill may endorse it thus. They pay A or order without recourse to me. That means don't come back to me. In case it is dishonored or whatever, don't come back to me, but please pay A the money. Or pay A or order sans recourse. Or pay A or order at his own risk. In these cases, the holder does not incur any liability on the bill as discussed. Okay, so these are the cases in which there is a conditional endorsement where the endorser or the maker does not take any responsibility on himself. Please take a minute, go through this. Any questions? Please ask me. Come on. Come on. Please take a couple of minutes, go through this. Any questions? Please ask me. Any questions? Come on, let me know once you're done, please. Are we done? Okay, let's proceed. Now, liability depend upon a contingency. So, by making his liability dependent upon a happening of a specified event which may never happen, in such a case, the liability of a holder as the endorser arises only upon happening of a specified event and is extinguished if the event becomes impossible or the conditions specified therein are not fulfilled. But the endorsee can sue the prior parties before happening of that event. So, this is also a kind of a conditional endorsement. Okay, first one was sans recourse, that means without recourse to the old one. Then there is a liability depending upon a contingency. Then you have a facultative endorsement. In it, an endorser by express words abandons some right or increases his liability under an instrument. For example, the holder may waive presentment of the instrument for acceptance or notice of dishonor by the holder. And endorsement, pay a order, notice of dishonor waived, is a facultative endorsement. Then you have a sans phrase endorsement. This is also a kind of a conditional endorsement where the endorser does not want the endorsee or any subsequent holder to incur any expenses on his account on the instrument. The endorsement is sans phrase. Okay, so these are the kind of conditional endorsements that an endorser can make. Please take 2 minutes, go through this. Any questions? Please ask me. Come on, any questions? Please ask me. Any questions? Please ask. Take another minute. Come on. Any questions? Please ask me. Are we done? Okay. Now, conversion of an endorsement in blank into an endorsement in full. Now, we did discuss what is an endorsement in blank, right? Where the endorser just signs, and an endorsement is full is where he names the person to whom the endorsement is being made and then signs. So now let's look at how do we convert an endorsement in blank into an endorsement in full. The holder of a negotiable instrument endorsed in blank may, without signing his own name, by writing above the endorser's signature a direction to pay to any other person as endorsee, convert the endorsement into blank into an endorsement in full, and the holder does not thereby incur the responsibility of the endorser. So please remember, in an endorsement in blank, the endorser has just signed, right? So if any person wants to convert that endorsement in blank into an endorsement in full, just above the signature of the endorser, he can name the person to whom the endorsement is to be made without actually incurring the responsibility of an endorser. Okay, according to section 55, if a negotiable instrument after having been endorsed in blank is endorsed in full, the amount of it cannot be claimed from the endorser in full except by the person to whom it has been endorsed in full or by the one who derives to such person. So we have already seen, right, if there is an endorsement in full, then only the person whose name is appearing can claim from the endorser. So same thing will happen when an endorsement is blank is converted into an endorsement in full. For example, A is the payee or holder of a bill. A endorses it in blank and delivers it to B. That means he just signs his name at the back and gives it to B. B endorses it in full to C or order. C, without endorsement, transfers the bill to D. D, as the bearer, is entitled to receive the payment or sue the drawer, acceptor, or A, who has endorsed the bill in blank. But he cannot sue B or C. C can sue B as he received the bill from an endorsement in full. If, however, C, instead of passing the bill to D without endorsement, passes it by a regular endorsement, D can claim against all the parties. So here we see how an endorsement in blank is being passed on to the last party, and then if the last party there is any default, he can claim from the first party. So the intermediaries have avoided from becoming the endorsers. Okay, please take a couple of minutes, go through this. Any questions, please ask me. Come on. Come on. Any questions, please ask me. Come on, go through it, take a couple of minutes. Any questions, please ask me. Please take another minute. Come on. Are we done? Okay, let's move on now. Essentials of a valid endorsement. So whenever an endorsement is made, whether it is full, blank, or whatever, there are certain essentials that are required in every endorsement. Let's have a look quickly at those essentials. Signature of the endorser. The endorsement must be signed. The endorsement may be made by the endorser either by merely signing his name on the instrument or by specifying, in addition to his signature, the person to whom or to whose order the instrument is payable. So there could be an endorsement in blank or it could be an endorsement in full. When in a bill payable to order, the endorsee's name is wrongly spelled, he should, when he endorses it, sign the name as spelled in the instrument and write the correct spelling within brackets after his endorsement. So he has to sign his correct name, and if there's a mistake, he needs to rectify it and put his correct spelling within brackets after the endorsement. Okay, then who may endorse or negotiate? Every sole maker, drawer, payee, or endorsee, or all of the several makers, drawers, payees, or endorsees of a negotiable instrument may endorse and negotiate the same, unless negotiability of such an instrument has been restricted or excluded as mentioned. Okay, explanation. It is, however, necessary that any such maker or drawer who wants to endorse is in lawful possession of the instrument may endorse it. Okay, just give me a second. I'll just get some water. Just give me a second. Sir, I'm not interested, sir, and please don't call me about it. Okay. Alright, example, a bill is drawn payable to A or order. A endorses it to B. The endorsement not containing the words or order or any equivalent words. B may negotiate the instrument. Okay, so B can further endorse it. Please take a couple of minutes, go through this. Any questions, please ask me. Come on. Any questions, please ask. Any questions you may have, please ask me. Come on. Please take another couple of minutes. Any questions, please ask me. Come on, carefully go through this. It's an important slide. Okay, let's move on. Now, what is the next essential effects of endorsement? The endorsement of a negotiable instrument is followed by delivery transfers to the endorsee the property therein with the right to further negotiation, but the endorsement may, by express words, restrict or exclude such right, or may merely constitute the endorsee an agent to endorse the instrument, or to receive its contents from the endorser or for some other specified person. So, like we saw in the previous section, there could be a restrictive endorsement as well, where the endorser restricts the endorsee from further endorsing it to someone else. Okay, examples. B signs the following endorsements on different negotiable instruments payable to the bearer. Pay the contents to C only. Pay C for my use. Pay C or order of B on account of B. The within must be credited to C. So in certain cases it is a restrictive endorsement, and further these negotiable instruments cannot be endorsed by the endorsee. These endorsements exclude the right of further negotiations by C. Pay C value and account of the Oriental Bank. Pay the contents to C. Bring part of the consideration in a certain deed of assignment executed by C to endorser and others. These endorsements do not exclude the right of further negotiation of C. So the first set, ABCD, what you saw are restrictive endorsements, whereas the last four are not restrictive negotiations. Okay, please take a couple of minutes, go through this. Any question, please ask me. Any questions, please ask. Come on, take another couple of minutes, carefully go through this. Any questions, please ask me. Let me know if you have any questions, please. Are we done? Come on. Any questions? Please ask. Come on, any questions? Please ask me. Take another couple of minutes. Okay, let's move on. Now, endorser who excludes his own liability or makes it conditional. The endorser of a negotiable instrument may, by express words in the endorsement, or exclude his liability. That means it should not come back to him if it bounces. Make such liability or the right of the endorsee to receive the amount due thereon depend upon the happening of a specified event, although such event may never happen. Where an endorser so excludes his liability and afterwards becomes the holder of the instrument, all intermediates endorsees are liable to him. Okay, so there are situations in which the endorser can exclude or extinguish his liability, that in case something happens to the endorsed negotiable instrument, it bounces or if anything happens to it, he should not be responsible. So he can, by express words in the contract, exclude his own liability, or he could make certain conditions subject to which the negotiable instrument will be honored. Examples: the endorser of a negotiable instrument signs his name adding the words without recourse. So without recourse means whoever it might be endorsed to, it might happen 10 endorsements. But in case the final one that there is a check bounce or something, then obviously they cannot come back to the original endorser. Upon this endorsement, he incurs no liability. So he incurs no liability when the negotiable instrument bounces or it comes back. As the payee and the holder of a negotiable instrument, A is the payee and holder of a negotiable instrument, excluding personal liability by an endorsement without recourse. He transfers the instrument to B. So he makes an endorsement and he says without recourse, and B endorses it to C, who endorses it to A. A is not only reinstated in his former rights but has the rights of the endorsee against B and C. So in case when the whole negotiable instrument which A endorsed to B, B endorsed to C, and C endorses it back to A, it's come back to him, and A originally had said without recourse. So in case if A presents the negotiable instrument and it bounces, then A is not responsible, but he can hold B and C responsible for the same. That is what you mean by conditional endorsement. Alright, please take 2 minutes, go through this. Any questions, please ask me. Any questions, please ask. Come on, take a couple of minutes, go through this, please. Any questions, please ask. Let me know once we're done, please. Come on. Any questions, please ask me. Are we done? Please take another minute, carefully go through this. Come on. So these are examples of an endorsement without recourse. That means the endorser will not be liable. Take a minute. Any questions? Please ask me. Okay. Now, an instrument obtained by unlawful means or for unlawful considerations, how is that treated? Let's have a discussion. When a negotiable instrument has been lost or has been obtained by the maker, acceptor, or holder, thereby by means of an offense, fraud, or for unlawful consideration. So, in any of these situations, let's say a negotiable instrument has been lost or the maker, acceptor, or holder has got possession of it by an offense, or fraud, or for unlawful consideration. Then let's have a look at how it is treated. No possessor or endorsee who claims through the person who found so or obtained the instrument is entitled to receive the amount due thereon from such maker, acceptor, or holder, or from any party prior to such holder, unless such possessor or endorsee is or some person through whom he claims was a holder thereof in due course. That means in case of any negotiable instrument that was lost and it was found by someone, or it has been obtained by a person through an offense, fraud, or unlawful consideration, cannot pass on a good title to someone else unless and until the endorsee or the receiver of that under that negotiable instrument receives it as a holder in due course. That means from 2-3 people, not directly from the person who has found a lost instrument or who has obtained an instrument to fraud, because that person does not have a good title. But if he endorses it to someone who obtains it in good title, then he can pass on a good title to someone else. Okay, so instrument acquired after dishonor or when overdue. Okay, so the holder of a negotiable instrument who acquired it after dishonor, whether by non-acceptance, non-payment, with notice thereof, or after maturity. Okay, so similar will be the case with those. Okay, please take a minute, go through this. Any questions? Please ask me. Any questions? Please ask. Come on. Any questions you may have, please ask me. Please take a couple of minutes. Any questions, please ask. Come on, take a couple more minutes, go through this. Any questions, please ask. Come on, take another minute. Any questions, please ask. Come on. It's an important slide. Please go through it. Any questions you may have, please ask me. Any questions? Please ask me. Take another minute, please. Okay, now let's look at what do you mean by accommodation note or bill. Provided that any person who in good faith and for consideration becomes the holder after maturity of a promissory note or bill of exchange made, drawn or accepted without consideration for the purpose of enabling some party thereto to raise money thereon, may recover the amount of the note or bill from any party. Okay? Example, the acceptor of a bill of exchange, when he accepted it, deposited with the drawer certain goods as a collateral for the payment of the bill, with power of to the drawer to sell the goods and apply the proceeds in discharge of the bill if it were not paid at maturity. The bill not having been paid at maturity, the drawer sold the goods and retained the proceeds, but endorsed the bill to A. A's title is subject to the same objection as that of the drawer's title. Okay, so this simply means that the drawer or maker or holder, if he does not have a good title on the negotiable instrument, he cannot pass on a good title to the others. Instrument, the negotiation till payment or satisfaction. A negotiable instrument may be negotiated except by the maker, drawer or account acceptor after maturity until payment or satisfaction thereof by the maker, drawer or acceptee, drawee or acceptor, or at maturity but not after such payment or satisfaction. So this simply means until a negotiable instrument is actually satisfied or fulfilled, it can keep on being negotiated or transferred from person to person. Okay? Yes, please take 2 minutes, go through this. Any questions, please ask me. Any questions, please ask. Come on. Any questions, please ask me. Take a couple of minutes. Come on. I'm giving you time so that you can read it carefully and ask me any questions you may have. Come on, any questions? Any questions, please ask me. Come on. Are we done? Okay, now let's look at when is a cancellation of endorsement possible, where the holder of a negotiable instrument without the consent of the endorser destroys or impairs the endorser's remedy against a prior party. The endorser is discharged from liability to the holder to the same extent as if the instrument has been paid at maturity. Okay, so let's take an example. A is the holder of bill of exchange made payable to the order of B, which contains the following endorsements in blank. First endorsement is B, second endorsement is C, third endorsement is D, fourth endorsement is E, and A puts this bill in suit against C and strikes out without E's consent the endorsements by C and D. A is not entitled to recover anything from E because he has put this line there, without E's consent. The endorsement by C and D are gone, they are lapsed, and so A is not entitled to recover anything from E. So then the endorsement is said to be cancelled. Okay. Then negotiation, negotiation back, taking up of a bill. In the course of negotiation, if a negotiable instrument is negotiated back by an endorser to any of the prior party on the negotiable instrument, it is termed as negotiation back. The person who becomes the holder in due course under this negotiation back cannot make any of the intermediate endorsers liable on the instruments. But where an endorser had excluded his liability by the word sans recourse or without recourse to me, and after that becomes the holder of the instrument in his own right under the negotiation back, all intermediate endorsers are liable to him. And in case of dishonor, he can recover the amount from any of them. This just means whenever the original endorser limits or restricts his liability by writing sans recourse or without recourse to me, and the negotiable instrument goes round and comes to him, then obviously he is not liable on it, right? So, but the intermediary endorsees, they are all liable to him in case the negotiable instrument is dishonored. Okay, please take a couple of minutes, go through this. Any questions, please ask. Any questions, please ask. Come on, any questions? Come on, take a couple of minutes, go through this carefully. Any questions, please ask me. Any questions, please ask. Come on, take another couple of minutes, please. Are we done? Come on. Let me know once you're done, please. Any questions? Please ask me. Okay, now let's look at parties to notes, bills, and exchange. So, who are the parties? The capacity of the parties, the capacity to make, draw, accepts, etc. of instruments. Every person capable of contracting according to the law to which he is subject may bind himself and be bound by the making, drawing, acceptance, endorsement, delivery, and negotiation of a promissory note, bill of exchange. Okay, so any person who is actually has the capacity to contract as per the law applicable to him can make or accept a bill of exchange. A minor may draw, endorse, deliver, and negotiate such instruments so as to bind all the parties except himself, because a minor does not have a capacity to contract. A minor's agreement is void and cannot be ratified when he attains the age of maturity. A minor cannot bind himself under a negotiable instrument as his contract is absolutely void. Example: A draws a check in favor of M, a minor. M endorses the same in favor of X. The check is dishonored by the bank on grounds of inadequate funds. Here, in this case, M, being a minor, may draw, endorse, deliver, and negotiate the instrument so as to bind all the parties except himself. Therefore, M is not liable. X can thus proceed against A. Now, why X can proceed against A and not against M? Because M does not have the capacity to contract, and so he can bind all the parties except himself. All right, please take 2 minutes, go through this. Any questions? Please ask me. Any questions? Please ask. Come on. Any questions? Please ask me. Take a couple of minutes, please. Come on. Let me know once we're done, please. Any questions? Please ask. Come on. Are we done? Take another minute, please. Any questions? Please ask. Okay, then authority to sign, that is through agency. Every person capable of incurring liability may bind himself or be bound by a duly authorizing agent acting in his name. What is the position of legal representative? A legal representative of a deceased person who signs his name on a promissory note, bill of exchange, or check is liable personally thereon unless he expressly limits his liability to the extent of the assets received by him. Thus, in the absence of an express contract to the contrary, the liability of a legal representative is unlimited. However, a legal representative may, by an express agreement, limit his liability. Further, he may exclude his liability by adding the word sans recourse or without recourse. Okay, so that is the position of a legal representative. Then you have, see, these are not very important terminologies, so I'm just topics, so I'm just going through them quickly. Endorsement by legal representative. The legal representative of a deceased person cannot negotiate by delivery only. A promissory note, bill of exchange, or check payable to order and endorsed by the deceased but not delivered. A legal representative is not an agent of the deceased. Therefore, a legal representative cannot complete the instrument if the instrument was executed by the deceased but could not be delivered because of his death. For example, A holder of a bill to B, before delivering the bill, died. The legal representative of A subsequently delivers the bill to B. The endorsement is valid and B cannot sue on the bill. Okay, so these are just some information thing about the agent, legal representative, and what are their liabilities. Okay, please take 2 minutes, go through them, and then we proceed. Any questions, you may please ask me. Come on. Any questions you may have, please ask me. Come on, take a couple more minutes, go through this carefully. Come on. Please take a couple of minutes. Come on. Any questions, please ask me. Any questions, please ask. Come on. Okay, now let's look at the liabilities of the parties. What is the liability of an agent? What is the liability of a legal representative? What is the liability of drawer? Liability of a drawee of a check? The liability of a maker of a note and acceptor of a bill? The liability of an endorser? The liability of prior parties to holders in due course? And liability of prior parties as principal in respect to subsequent parties. So now one by one we will look at all the liabilities. Now Liability of the agent signing. An agent who signs his name to a promissory note, bill of exchange, or check without indicating thereon that he signs as an agent or that he does not intend thereon to incur personal responsibility is liable personally on the instrument, except to those who induced him to sign upon the belief that the principal only would be held liable. So, whenever an agent is signing a bill of exchange, a promissory note, or check on behalf of the principal, he has to mention that he's signing there as an agent. If he fails to mention that he's signing as an agent, then he shall be personally liable for that bill of exchange that he has drawn. Okay, so it's very important for an agent to mention that he's signing as an agent of the principal. The liability of legal representative signing. A legal representative of a deceased person who signs his name to a promissory note, bill of exchange, or check is liable personally thereon unless he expressly limits his liability to the extent of the assets received by him. So now, who is a legal representative? So whenever a person passes away, so the person who are remaining after that are the legal representatives. So in case a legal representative signs a check on behalf of the deceased person, they need to clearly mention that they are liable only to the extent of the assets received by him. The assets means the assets of the deceased person that they have received, and they are not personally liable. In case they do not mention that, then they also, the legal representatives also, will be personally liable to the party they've issued the negotiable instrument to. Then third one, liability of a drawer of bill of exchange or check. The drawer of a bill of exchange or check is bound in case of dishonor by the drawee or acceptor thereof to compensate the holder, provided due notice of dishonor has been given to or received by the drawer as hereinafter provided. The liability of the maker of a promissory note is primary, while the liability of the drawer of a bill arises on dishonor by acceptance or non-acceptance by the drawee or acceptor respectively. The drawer of a bill, however, can exclude or limit his liability upon the bill. So basically, any person who draws a bill of exchange is primarily responsible on it in case of dishonor or check bouncing. Come on, take 2 minutes, go through this. Any questions, please ask me. Any questions, please ask. Come on, take a couple of minutes, go through this please. Any questions, please ask. Come on. Any questions, please ask me. Take a couple more minutes, please. Come on. Okay, let's proceed. Now, liability of a drawee of a check. The drawee of a check having sufficient funds of the drawer in his hands properly applicable to the payment of such check must pay the check when the duly required to do so. And the default of such payment must compensate the drawer for any loss or damage caused by such default. So, who is a drawee? In case of a check, the drawee is the bank. So, when the bank holds sufficient cash on behalf of the drawer of the check, it becomes a responsibility to honor the check whenever it comes to them. And in case they fail to do so, they must compensate the drawer for any loss or damage caused by such default. It could mean a loss of reputation as well. Then the liability of a maker of note and acceptor of bill. In the absence of a contract to the contrary, the maker of a promissory note and the acceptor before maturity of a bill of exchange are bound to pay the amount thereof at maturity according to the apparent tenor of the note or acceptance respectively, and the acceptor of a bill of exchange at or after maturity is bound to pay the amount thereof to the holder of demand. This is a simple, straightforward thing. Now, the liability of the endorser. In the absence of a contract to the contrary, whoever endorses and delivers a negotiable instrument before maturity without in such endorsement expressly excluding or making conditional in his own liability is bound thereby to every subsequent holder. In case of dishonor by the drawee, acceptor, or maker, to compensate such holder for any loss or damage caused to him by such dishonor, provided due notice of dishonor has been given to or received by such endorser as herein provided. So, in case it is an endorser, unless he removes or specifically cancels his liability, then in that case he will be responsible in case there is a dishonor of the check, provided notice has been given to him about such dishonor by the endorser and herein provided. Okay, please take a couple of minutes, go through this. Any questions? Please ask. Come on, please take a couple of minutes, go through this, please. Any questions? Please ask me. Come on. Come on, any questions? Please ask me. Please take a couple of minutes. Come on. Are we done? Okay, let's proceed. Now, liability of prior parties to holder in due course. Every prior party to a negotiable instrument is liable thereon to the holder in due course until the instrument is duly satisfied. The prior party, a principal in respect of each subsequent party, as between the parties, so liable as sureties. Each prior party is in the absence of a contract to the contrary also liable thereon as a principal debtor in respect of such subsequent party. Example, A draws a bill payable to his own order on B, who accepts. A afterwards endorses the bill to C, C to D, D to E, and as between E and B, B is the principal debtor and A, C, D are his sureties. As between E and A is the principal debtor and C and D are his sureties. As between E and C, C is the principal debtor and D has surety. So whenever a bill of exchange is kept on being endorsed or negotiated, then the people in between become the sureties of the final beneficiary of the bill of exchange. Okay, please take a minute, go through this. Any questions? Please ask me. Any questions? Please ask. Come on, any questions? Please ask me. Come on, take a minute, please. Are we done? Come on. Okay, so in case we are done, we will be ending this session with this slide. I hope you really found the session useful. Just give me a minute. Thank you so much for being a wonderful audience. I hope you found the session useful. Please do not forget to use the code Prathik to get an instant discount of 10% on your Plus subscription, PRATHIK. Please remember this 10% discount is being reduced to 5% from 1st March 2021. So in case you have decided to become a part of the Plus platform and not yet done so, this is the right time for you to do it, to enjoy the discount of 10% on your Plus subscription. And while doing so, please do not forget to use the code Prathik. Also, I would like to welcome you to Crack CA Exams once again, which is a vertical and channel of Unacademy that caters to the students of CA Foundation and Intermediate in their journey and pursuit of preparation for the CA Foundation and Intermediate examinations by providing top educators, quality content, and overall a great learning experience. So come, let's crack CA exams with Unacademy, India's largest online learning platform. Please do not forget to subscribe to my YouTube channel to get real-time information about the timings and topics of my session. And overall, a big thank you for being a wonderful audience. I hope you found this session useful. Please do not forget to click the follow button on my profile on the Unacademy app.